A business can be profitable and still collapse. Not in theory, in real life. Every year, companies report profits, then shut down weeks later. Meanwhile, other businesses show little profit, but keep growing, hiring, and expanding. So, what's happening? The answer is cash flow. Not revenue, not profit, cash flow. And once you understand the difference, you'll never look at businesses or money the same way again. This video isn't about accounting tricks. It's about how businesses actually survive. We'll break down why profit can lie, why cash flow tells the truth, and why investors and founders obsess over it. If you've ever wondered how a successful business can fail, or how a struggling one keeps running, this is the missing explanation. Most people think profit and cash flow are the same thing. They're not. Profit is a calculation. Cash flow is reality. Profit asks, how much did we earn on paper? Cash flow asked, how much money actually moved in and out? A company can record profit without receiving cash yet. Invoices can be unpaid. Revenue can be promised. Sales can be booked months before money arrives. But expenses, they don't wait. Rent is due. Salaries are due. Suppliers want payment. Profit lives in reports. Cash flow lives in the bank account. And banks don't accept future profit as payment. This is where many businesses get trapped. They look successful, but they're slowly suffocating. Profit can be misleading because it ignores timing. Imagine a business that sells 10 million naira worth of goods this month. On paper, that looks great. But what if customers pay in 60 days, suppliers want cash immediately, salaries are due every month? The business shows profit, but has no money to operate. This is how companies die quietly. Not because demand disappeared, not because the product failed, but because money arrived too late. Profit celebrates success, cash flow determines survival. This is why experienced founders worry less about margins and more about when money enters and leaves. Timing, not totals, kills businesses. Cash flow gives a business breathing room. It pays bills. It absorbs mistakes. It buys time. With strong cash flow, delays don't cause panic. Slow months don't cause layoffs. Unexpected costs don't cause collapse. Cash flow is flexibility. It allows businesses to negotiate better deals, invest without borrowing, survive market shocks. This is why many boring businesses last decades. They don't chase rapid growth. They don't maximize profit margins. They focus on steady inflows and controlled outflows. They're not impressive on paper, but they're almost impossible to kill. Smart companies design their business models around cash flow. Subscriptions collect money up front. Retail demands immediate payment. Software charges before service is delivered. Why? Because cash first reduces risk. Even companies with thin margins prefer predictable inflows over high profits that arrive late. This is why gyms lock you into monthly plans. SaaS tools bill annually, platforms hold funds before payouts. It's not greed, it's survival engineering. The business that controls cash timing controls its future. Understanding cash flow is useless unless it changes behavior. For businesses, cash flow should be managed deliberately. A healthy business prioritizes inflow timing before growth. That means collecting payments faster than it pays expenses, avoiding long receivable cycles, matching fixed costs to predictable income. For example, a small service business that bills clients monthly but pays staff weekly is constantly under pressure. The solution isn't higher profit, it's restructuring payment terms, requesting deposits, or switching to upfront billing. For individuals, the principle is the same. Income is not wealth. Cash flow is. Someone earning 500,000 naira monthly, but paying rent, subscriptions, and loans upfront can feel broke constantly. Another person earning less, but with automated savings, staggered bills, and emergency buffers, feels stable. Cash flow is about control. When money arrives before it's demanded, stress reduces and decisions improve. This is how stability is built, quietly, intentionally, and over time. Investors don't trust profit alone. They look at operating cash flow free, cash flow burn rate. Because cash flow reveals truth. It shows whether growth is real, whether expansion is sustainable, whether profits are cosmetic. A company can hide weak fundamentals with profit accounting. It can't hide empty bank accounts. This is why startups raise money not to become profitable, but to extend cash runway. Cash buys time, time buys strategy. Profit makes businesses look successful. Cash flow keeps them alive. Once you understand this, you stop being impressed by headlines and start asking better questions. Where does the money move? When does it arrive? Who waits? On Business Decoded, we break down money and businesses without illusions. This is Business Decoded, where we explain how money and businesses really work